Hello, my name's Stanley. Today I'll show you a strategy that's ideal for those who like simplicity. 2 indicators, no confusion, no complicated conditions, just clear signals and a clear direction. If you are tired of overload and want clarity, this video is for you. So please watch until the end. This system could become your main one. And of course, I'd appreciate it if you subscribe to the channel and like this video. Let's get started. First, let's prepare the tools we need for work. I'm setting classic candles with a 1-minute time frame. Let's go to the Indicators tab and select the CCI and the Williams. Let's configure the CCI first. Set the period to 5. Go to Style, Disable Background. Set the main line to turquoise, width 2. Set line 100 to green, width 2. And let's move the opacity to the right. Set line minus 100 to red, width 2. Move the opacity to the right. And save. Let's configure the Williams next. Set the period to 5. Go to Style. Let's set the width of the main line to 2. Set the width of lines minus 20 and minus 80 to 2. And let's move the opacity to the right. And save. So the indicators are ready to go, and if you are trading on your phone, set it up the same way. I'm starting with a clear signal that forms at a key level. Expiration is 3 minutes, and I'm opening a short trade for $540. Now I'll explain in detail how to work with this strategy and what you should pay special attention to. Look, the approach is based on 2 indicators. They're very similar to each other, both in terms of color scheme and the logic of the line's movement, which is what makes them particularly convenient to use together. In the current situation on both indicators, the turquoise line crossed the green line from top to bottom, and this is the key main signal for understanding the direction of the market. It's very important that such crossovers occur simultaneously. If one indicator lags behind or shows a different picture, the signal is considered weak. And here, both tools are fully aligned and don't contradict each other, which significantly increases the reliability of the analysis. When the indicators point in the same direction synchronously, the direction is clear and confident, and the decision is made not on emotions, but on market logic. Let's see. And the first entry worked perfectly. I locked in a profit of $496 and continued to monitor market movements. Do you want to see what I'm doing in the market right now? Then join me on Telegram. There I show my live work, give ideas for the day, and enable auto-copying for convenience. Closed materials are only available inside. Entry is free, but I'll soon restrict access, so please write to me so you don't miss out. After a while, the market provides another suitable moment. Expiration is 3 minutes, and I'm opening a short trade at $1,270. After a confident rise, the price approaches the resistance zone and begins to gradually change the nature of its movement. Growth slows down, momentum weakens, and the market smoothly builds a decline without sharp jerks. The candles become more downward-oriented, the structure looks neat and logical, and the downward momentum becomes more and more pronounced with each passing moment. At the same time, both indicators synchronously point to a decline, fully confirming what is visible on the chart. This coincidence reinforces confidence in the direction and makes the current picture as clear as possible. In these conditions, the expectation of profit seems reasonable. The market is developing calmly, consistently, and in the right direction. An excellent result. There's another $1,168 in profit. So I'm moving on to the next setup. Next, there's an accentuated upward impulse. With an expiry of 3 minutes, I'm opening a long trade for $900. The market pauses briefly as if gathering strength and then continues to grow steadily. This pause seems healthy and logical. The structure remains intact, the movement is under control, and then the impulse develops upwards again. At this point, both indicators simultaneously give a buy signal without contradicting each other, which significantly strengthens the overall picture. This suggests that the growth is not accidental, but is supported by the internal strength of the market. Buyers are clearly increasing pressure, the candles are becoming denser, the movement is accelerating, and the price is rising more and more confidently. In such a situation, the direction is clear, the momentum looks stable, so the expectation of profit here is fully justified. And my friend, if you still have questions after watching this video, be sure to send me a private message on Telegram. I'll be happy to help you. A good result. There's a profit of $828. So the series continues. Towards the end of the trading day, a clear upward signal forms. So I'm setting the timer for 3 minutes and opening a long trade for $950. After a short pause, the price starts to rise again, which seems quite natural given the current situation. The candles are moving up steadily, the movement is smooth without sharp pullbacks, and the structure remains clear and directional. It's clear that the market is not losing momentum, but has only taken a short break before continuing its growth. Globally, the chart is indeed looking up. The overall rhythm is maintained, the momentum is sustained, and the upward direction remains a priority. In such a configuration, it's logical to expect that the trend will continue to develop higher as the market demonstrates stability and a confident desire for growth. Let's see. And at the end of the trading day, I recorded a profit of $874 and my balance rose to $4,755. So, let's sum up the results. A wonderful trading session. My balance has grown from $1,388 to $4,755. And if you have any questions about the methodology itself or want to understand it more deeply, please don't hesitate to write to me on Telegram. I'll be happy to help you. Well, thank you very much for watching, liking and subscribing to this channel. See you soon and happy trading!